Now, in the same way the financial action plan prescribes you to do so, you should build up a fully funded emergency fund of 4 to 6 months of household expenses when you get out of debt, when you get out of consumer debt other than your home. Now, this doesn't sound like having fun with your money. I understand, right? This doesn't sound like really maximizing what you have too much. But we've talked before about how emergency funds are insurance against tragedy, right? We are putting this money away to insure against certain tragedies that could occur in our lives. And what emergency funds do is they keep us from going back to debt, right? They keep us from going back into debt. And we don't want that. First and foremost, we have to put up these safeguards between us and going back into debt. That's why we keep budgeting, because it's going to help us to keep from going back into debt. That's why we build up an emergency fund, because it's going to help to keep us from going back into debt. And so if we do these things, we put up these safeguards, then we can be better equipped to actually maximize on our financial situation as we move forward. So we need to build up that emergency fund. We really need to get that savings built up. So in a savings account or money market account, something of the like, just put the money away. This is not to be invested. This is to be saved in a savings type account, right? And so we need to do that and have that good pad, that good cushion between ourselves and potential tragedies that could occur in our life. And so we need to make sure when we do get out of debt that we're budgeting heavily towards getting that emergency fund built up. And once you get that emergency fund built up, then you can have a really good sense of financial security, right? Now, you owe nobody money and you have money yourself sitting in the bank in case something does go wrong, right? It's a far cry from being in a place where you are in debt and you don't have much, if any, money in savings, right? This is a far different situation than maybe you once were in, or maybe you're in that situation now. I don't want to run past that. I don't want to assume that you're in these particular situations where you are out of debt now, right? Even if you're working out of debt, I want you to know what the next steps are. I want you to know what to look forward to and what you should be doing next to build on your financial successes. That way, once you do get to that place where you're out of debt, it's just second nature and you can make the decisions just right off top and go right into what the financial action plan is teaching and what I am telling you to do on a day-to-day basis. So having that emergency fund built up is extremely useful and can allow you to tragedy-proof your home from things like another 2020 occurring and maybe a job loss like that, or some loss of income, decrease in hours, whatever it may be, right? Building the emergency fund is extremely useful. So that's the first place that you are able to build something up that you didn't have before based on the debt payments that you were making. Now you just reallocate that capital towards your emergency funds. Then obviously the sixth part of the financial action plan, it coincides with the seventh, but the sixth is to invest at least 15% of your income for your future, right? Investing it in retirement accounts, brokerage accounts, rental real estate, things that are going to go up in value over time at a good clip. And it coincides with the seventh part, which is to pay your home off early. So now without having payments, without having debt payments, now we can really get into a place where we are building money for our future. We can really get into a place where we can maximize what we have and grow what we have over the long term. And that's one of the first things you need to do. Again, I know this doesn't sound sexy. It doesn't sound extremely attractive. It doesn't sound like something that is gonna win big in the short term, or it's not gonna provide a lot of short-term gratification. We'll get to some more short-term gratification type things, right? But you need to be putting this money away. You need to be reallocating this capital that you had going into debt payments, reallocate that money into investing for your future, into building up assets for your future. That way you don't have to be a struggling retiree, that you can retire with dignity, that you can enjoy your latter years and have plenty of money to create the income that you need in order to live on later on. So you really need to increase those retirement contributions. You really need to maximize what's available to you, whether it be Roth IRAs or 401ks, or if you have an HSA available to you, or investing for your kids' college, whether it be in 529 plans or just in regular brokerage accounts, whatever it is, right? You need to be investing for the future of yourself and your family. Obviously, your retirement comes before your kids, and your retirement also comes before your health savings. But you do need to be putting money away for the things that you possibly can be putting money away for. And that will really pay off over the long term, because you can invest those things in assets that are going to increase in value and continue to compound your money into the future. And it will also make it easier to throw large amounts of money into investments, or any extra money that you get into investments, because when you're in debt, you feel this need to, when you get extra money, or when you have some money laying around, you're like, hey, I probably need to be putting that towards this debt or that debt. Or if you're somebody who's trying to invest and pay off debt at the same time, you're having to make those allocation decisions. Well, I leave you no choice in the financial action plan what the decision is. The decision is we're going to pay off debt first before we are heavily investing for our future. And so now you can really allocate that money into the investments that are going to increase in value over time. And then obviously that seventh part of the financial action plan, which is paying off your home early, you can be adding extra to your monthly house payment. And that can be extremely beneficial for you and your family, because if being out of debt and having extra cash flow just based on consumer debts, based on car payments and credit cards and all those different types of things and student loans, right? How much more do you think you'll have to spend on whatever you want, or increase your investing, or increase your giving, or whatever it may be, if you pay off your home? If you pay off your home, that is most people's biggest expense that they have on a month-to-month basis. And so you'll be keeping so much of your income, right? You'll be keeping so much of your income if you get that home paid off. And so all of these things that I've talked about to this point, right, that we can do if we are out of debt, are really, really beneficial financial things that can really help us, right? These are financially wise things to do that can allow us to plan well for our long-term future.